Vancouver, Washington. In this quiet city, brushed by the winds of the Pacific, one bank has stood for over a century: Riverview Bancorp. For decades, it has been the backbone of the local economy, a symbol of small-town stability, and often called the bank that never wavers. But recently, beneath that image of perfection, strange and unexplained signals have begun to appear. The numbers remain pristine, yet a peculiar stillness lingers. On the surface, nothing seems wrong, and yet investors can feel it. This stillness could be the calm before a storm. Riverview Bancorp's total assets stand at about 1.5 billion USD, with a non-performing asset ratio of just 0.01% and a net interest margin of 2.78%, metrics that are textbook examples of financial health for a community bank. And yet, its stock price hovers in the low $5 range. The book value per share is 6.40 USD, meaning the stock trades at a roughly 20% discount to tangible assets. Normally, banks with fundamentals this strong command a premium in the market, but Riverview does not. A bank with perfect financial statements that fails to gain market trust, that's the first mystery. Riverview's history is solid. Founded on May 11, 1923 in Washington State as Clark County Savings and Loan Association, it rebranded in 1993 as Riverview Community Bank, deepening its local roots. Then in 1997, it established the holding company Riverview Bancorp, Inc., and listed on the NASDAQ. Through a century of financial crises, Riverview never once became subject to federal deposit insurance supervision. When other regional banks stumbled, Riverview held firm. It came to embody the notion of a bank that simply doesn't fail. But in 2024, subtle cracks appeared in that flawless record. That year, Riverview reduced its quarterly dividend from 6 cents per share to 2 cents, a two-thirds cut. The stated reason was to strengthen retained earnings. Yet, in the world of finance, banks cut dividends for only two reasons: a sharp profit decline or a weakened capital ratio. Riverview had neither. Net income was steady around 5 million USD, and liquidity was strong. In such conditions, maintaining or even slightly raising dividends to signal stability is standard practice. Riverview did the opposite. That move was the first red flag and the first hint that something was different. Only months later came the second anomaly. The bank appointed a new chief executive officer, Nicole Sherman, a 30-year veteran of community finance with deep experience in risk management and internal controls. Typically, a new CEO spends months restructuring and evaluating the organization before making bold financial decisions. Yet Riverview immediately announced a 2 million USD share repurchase program.